All right, it is Sunday, 9/25, September 25th. So I am going to go ahead and get started and get this recorded as I normally do so that I can plan my trades for the week, for the outlook for the week. Okay, so looking at fundamentals real quick. Sunday today doesn't seem to be happening as much, of course. Monday, we have Euro and Bank of Japan, Governor Kuroda. So it looked like he's going to say something, right? So this would be sometime, I would say tentatively around London session. So we should see something tonight, 2, 3, 4 o'clock Eastern time. And then we're going to have the President Lagarde for the central banks of Euro central bank say something around 9 a.m. So I would expect some volatility around Euro and Euro USD around that time. And then we have a couple of FOMC members to speak. I'm sure they're going to speak on something regarding the inflation, regarding the latest interest rate change that they announced last week, which was expected at 75 basis points. That had continued to strengthen the dollar, pushed up the dollar, and basically shorted the indices or the stock market. So it's very, very important to understand what happened and why. Okay, so on Tuesday, Fed Chair Powell, he will be speaking, and that looked like around 7:30 a.m. Eastern time. So I'm expecting anything he says during this time will have an impact on indices market at the 9:30 opening, and anything he says here will have an impact on dollars. Now, again, anytime I mention dollar, just think inversely, gold and BTC, okay? Then we got the durable goods order that would be coming out about 8:30. That would have some impact, nothing major. The major one would probably come around here, around 10 a.m. So it looked like anytime between 8:30 to 10 a.m., expect to see some volatility, pullbacks, things like that. And anything can happen, right? So on Wednesday, we do have the Euro central bank saying something during London session. It all depends on what they say on Monday for the Euro central bank. And then, of course, we have pending home sales, which we do expect pending home sales to continue on a decline. I'm sure it most definitely is. So we'll probably see some decline around that time and some report. And then Powell is going to come in and speak again. So it looked like it's just more follow-up talk on the Feds for the United States to give us more forward-looking, maybe more hawkish comments. Obviously, anything they say can have a significant impact at any time, especially when Fed Powell speaks, right, here on Tuesday, and he's going to speak again, plan to speak again on Wednesday. Bullard, another board member, may say something. So that 10 o'clock, 10:30, expect to see some volatility around that time as well for USD and gold. On Thursday, we have CAD GDP, month on month, and then you have the US dollars GDP, and then we have the Reserve Bank of New Zealand. Nothing major there, some more unemployment report, but nothing, showstopper here. But of course, anything can happen around this time because there are just more talks and more economic talks and currency strength and currency forward looking, the central bank's interest rate, things like that. And then on Friday, we're going to finish out with the core PCE price index. I do expect to see some significant, I would say, impact here, because this data right here is more about the consumer personal consumptions expenditure price index, more the measure of goods, services towards consumers by individuals, This does have some type of correlation to the CPI data, which is the Consumer Price Index, which is a measure of the inflation, okay? So we should expect to see something around that. And I would expect to see some volatility around 8:30 in the morning. So that would be on Friday. And then, of course, we have the CPI data. This is going to have some significant impact on Euro. Probably nothing will happen during Euro session until about 5 a.m. So I expect to see some volatility. So nothing major is what we saw last week in terms of central banks news, but you can definitely expect to see some volatility this week during this week's session. So again, as a wrap up, Monday, expect to see some volatility around Japan. So this will either continue with Japan's intervention on, what they just did on Friday, even though they continue to maintain the monetary policy of easing with no interest rate, but they went in and intervened with the foreign exchange and basically influenced the market and other central banks to stop the sell-off the yen, which strengthened yen. So this will be kind of an understanding of, is Japanese or the Japan going to maintain their intervention, and could they get other countries and currencies aligned with that intervention? So that was very, very key when I saw that, when Japan intervened with the forex market, and that rarely happens, but when that does happen, it's a sure sign to the market that they're basically saying, okay, that's enough, right? They're basically saying, hey, no more, this is it. And we don't want anything part of it. Stop the sell off or stop the buy off, and they'll intervene. And that's exactly what happened with JPY, which it strengthened and showing some sign of reversal on the JPY pairs. So this week would be more about that follow through, and that would basically happen tonight in London session around 3 o'clock, 2 o'clock, 4 o'clock in the morning, Eastern time. We probably would expect to see some type of either a follow through or more continuation of the strength of Japan. Next week, it's going to be more about Euro in terms of the Euro central banks, and also the follow through of the dollar. As you guys know, after the central banks for the Fed, the FOMC, announced the rate, it was basically not a showstopper the day of the announcement, but it was more of the follow through that happened the day after. And then on Thursday and Fridays would push the dollar up. And we'll take a look at the chart to a very high historical level that hasn't been seen since 2001, right? And now we're hitting towards that really high historical level that we say that's a very low probability of, 2000. Let's see here. Yeah, 2001. That's what we're approaching. December to January 2001. We'll take a look at the chart in a minute. So that's where we're approaching right now. We're at a very key critical level. A lot of people are talking about the dollar and how inflated it is. You probably hear a lot about it, about the news. And when you see something like this is more and more and more pressure that is calling for quote unquote crash, right? So anytime you have this much volatility, this much longer of a stubborn trend, then you'll start to hear more talks about crashes, right? So anything that keep going up and up and up and fall down will be a crash, right? And that's where we're heading right now, because the dollar should have corrected a long time ago. Now, if you guys can remember what I'm talking about in relation to what I call the rubber band effect, the more and more you stretch that rubber band, the more and more tension it's going to snap back, right? So when you see more and more of that tension, we're not only talking 50% snapback, we're talking almost a full correction when we get into more of the 718, maybe even 100% correction, which tells me that a crash is coming on the dollar. And it's more than just the dollar currency correction, but it could be more about also the United States and going into a recession because of the great increase and the steady increase of the interest rate. So anytime you have too much interest rate increase and too fast, that could potentially put the country in more of a showstopper, if you will, because you increase the borrowing rate, you increase the interest rate, and you basically stop or prevent, I wouldn't say prevent, but you more encourage the people, right, who and the money from spending, right? Because interest rate is too high and things cost too high and your dollar is not even going as far. And now you not only got high prices, but you got also high interest rates. And therefore people don't want to buy, for instance, cars and automobiles and houses at a very high inflationary rate, at a very high interest rate. Doesn't make any sense for me to pay $15,000, $20,000, let's say, uptick of a car value, or another, now we're having bidding wars to purchase houses, but my interest rate is going to be over 5% or 6% borrowing cost versus 2 to 3% low interest rate or 1% low interest rate on a home. And it just doesn't make any sense. So I just don't buy. It's not the right time to buy. And that's exactly what the government wants to do, to bring down inflation. But when you do it, when you raise interest rate too fast and too much, that could be one of the, I would say, the disadvantage or the fallback in regards to raising interest rate, because raising interest rate is good, right, to curb inflation or to slow inflation. But the drawback is if you do it too fast and you do it too much, you can actually cause the country to go into a recession, okay? So that is the biggest concern right now, is not only if the inflation is high, that's already there. We already know the inflation is through the roof, but now the rumors, you'll start to hear more and more rumors about the recession, right? Are we in a recession? Are we sure going to be hitting recession now? Is it going to be that bad? Things like that. And it's gets serious, right? So we'll take a look at the chart and I'll tell you guys exactly what I'm talking about. So other than that, next week, no central bank news. It's going to be no central bank major news like we did last week, but it's going to be more about what's going on in Euro and their inflation rate. So that will be seen. Let's see, we got Euro CPI data here on Friday. You got the USD PCE price index, that would be a showstopper on Friday. And then on Wednesday and Thursday, it's really light, news, but there is going to be some volatility, as we hear about the pending home rate, that's still going to be in a steady decline. You can expect that. And then you're going to hear more about Powell speaking on Tuesday and Wednesday. And I'm just kind of going back and summarizing. So Tuesday and Wednesday is going to be more about Powell speaking. So what he says will make a difference on the dollar. And anytime I'm talking about the dollar, just think about gold on the other side, okay? And that will wrap up next week. So we do expect to see some volatility. This could be a critical point for both Euro and also the dollar and gold, okay? So this week would be a very good pivotal point because we saw that the dollar push up. And now we're asking, are we basically to the upside? Are we at the peak of where the market wants to be and now could be in that correction? Because we know the dollar is way over exhausted. It is way overinflated, and we know Euro is undervalued at this point, okay? So fundamentally, next week will be a critical point to see how the market reacts after the Fed and also how the European inflation rate, because there will be an interest rate change that the euro will make. And I don't think it's next week. I think it's the week after. Yep, so Lagarde is going to speak next week, and they're going to probably give you more of a heads up of what they're getting ready to do in terms of interest rate. So more hawkish comments, more positive comments will make the euro a little bit strengthened, as right now we're below parity from a dollar to the euro. So we're all back below parity, and it's because of the strength in the dollar. So this week would be a pivotal point to say, are we at the top yet? And is this the time of the tide? Because this is going to be very, very critical. But in the midst of all that, we have Russia and Ukraine still a war issue, right? And it looks like it's heating up. So first of all, we got two issues in the war. We're in two situations. We got the Ukraine that is starting to win the war, right? So that is what they're saying. Ukraine is winning the war or winning more battles, and it's turning on their side. But now we're hearing Russia is going to increase troops. And I'm hearing rumors of 200, 300,000 troops, more troops to send down to Ukraine. Wow. This is getting really, really serious. And my concern is, could the United States get involved and other countries get involved? Could China make their final pitch about attacking Taiwan at that same time? Because then if that's the case, United States have already vowed to protect Taiwan and help Taiwan. And that is my concern, because that could easily lead to World War III. Right? So this is the geopolitical news that we're talking about. When that happens, as you already know, oil will shoot up, gold will shoot up, and dollar will probably maintain its strength. If not, it could drop, right? Because it's already inflated. Those are my concern that could create what we call a black swan event with really high spike, unsudden spike or unsudden drop. That can happen. The good thing is this will strengthen Japanese yen, as Japanese yen is also a safe haven currency along with Swiss francs. So those are safe haven currency, which a lot of people, when they get fear in the market, when they become more of a risk off sentiment, people will take their money out of odd, New Zealand, British pound, euro, and put it into more of a safe haven that is more consistent currency, stable currency, like Swiss francs. They'll probably start to strengthen the yen, and then gold, right? All of that could strengthen that, and therefore plummet all the other currency. So geopolitical news, fundamental news, will be critical of what happens this week. Okay, if you guys have not already heard, the Apple Store had removed MetaTrader 4 and MetaTrader 5 app from the Apple Store. So as of right now, no one is able to download the MetaTrader 4 or the MetaTrader 4 app on the Apple phone. As I'm aware, the Android users are not affected at this point. If you already have the MetaTrader 4 and MetaTrader 5 app on your phone, you will be fine, as you can continue to use the MetaTrader 4 and MetaTrader 5 app. Now, take that a step further. The US regulated brokers such as Oranda, I believe Forex.com, IG, had discontinued or not allowing the usage of the MetaTrader 5 app. I believe MetaTrader 4 is still available temporarily, but I think they are going to be pulling that as well in terms of a platform to be used to trade. As on the Forex.com, I believe IEG, they have their own trading platform as well. And you can also trade on TradingView on those US regulated brokers. Now, will this affect the Forex market? No. will this affect your money with your broker? And I would say the answer to that one is no as well. MetaTrader 4 and MetaTrader 5 is an application, right? As long as you can able to get to it on a desktop, download it to a desktop, you'll be fine. I always tell people, if you have it on your phone, that's great. It's always good to look at MetaTrader 4 on your phone, to monitor trades, and maybe even to close trades, but to analyze and initiate the trade, unless you already have it as a plan, it's probably not best to use MetaTrader 4, MetaTrader 5 app on your phone, as the phone's touchscreen and it doesn't give you enough information as you normally could do on a desktop. The other thing is indicators, custom indicators, e.g. triple dot trading system, for example, cannot be used on a MetaTrader 4 and MetaTrader 5 app, only on a MetaTrader 4 and MetaTrader 5 desktop version. So the reason why I'm hearing that the MetaTrader 4 and MetaTrader 5 app has been pulled from the Apple Store is more of a corporate move, kind of a boycott towards Russia. Why Russia? Because MetaTrader 5 specifically is designed by a Russian developer. And there is no real correlation to the MetaTrader 4, as you would think. MetaTrader 4 and MetaTrader 5, it's the same developer. Not necessarily. It is hosted by MQL. Obviously, MetaTrader 4 is the first one. MetaTrader 5 is the second one, which is confirmed to be developed by a Russian developer. But they're thinking there's some type of correlation possibly to the Russian government with MetaTrader 4 as well. So therefore, they're just going to go ahead and just kind of boycott. It's kind of a corporate move to boycott their latest announcement of sending more troops to Ukraine. And crazy. That's very, very shocking if you have not already heard already. And it's something I've never heard, nothing I've ever seen before, of, the Apple Store doing something like this since the inception of the App Store for the Apple, right? So Apple, I don't know, it's been around for what we can say about good 10 years, good 10, 12, 14 years, Apple's been around. So those Apple Store, MetaTrader 4 has been around longer than that, the desktop versions, right? So the mobile version is the one that has been the latest developed by Apple in terms of the App Store, and Android has also developed that. So those applications on mobile devices is fairly new still. So that's why this is the first time it has happened. And that's the reason why I haven't seen it or heard it before. But this is the first time. I'm going to assume it probably won't be the last, but this is the first time. And but MetaTrader 4 desktop and MetaTrader 5 is still the same. Some brokers are sending emails out, letting them know that, hey, we're aware that MetaTrader 4 is not, or MetaTrader 5 is no longer available to Apple, blah, blah, blah. And that this will not affect the Forex market. It will not affect your funds with our brokers and liquidity provider. And we're finding out ways to still get you access to the MetaTrader 4 for download if you have not already downloaded, because there's a way to do it. They just need to get to some type of MetaTrader 4 download platform to where you can download unapproved Apple app. Again, this only affects Apple iOS device and not necessarily any of the Android device or Android phone from Google. So Google has not announced or made their move as of right now in terms of boycotting any of the MetaTrader 4 platform due to some type of Russian correlation to the developer to show their non-approval or their unsupport to the Russian government or Russian developers. Okay, so that is some very, very important news you may want to be aware of if you've not. That's what I've heard. And as soon as I get more information, I'll make sure I share that with you guys for sure. But as of right now, This is what my sources and sources that I follow had that I've been reading and found out. Okay, so let's go to the technicals and let's start with the dollar. Okay. Now, as you guys can see, this is on a weekly chart. And there's a couple of things here that I want to point out, as you guys already know. This is huge. This is really, really, really huge. This is about the same, I would say, same significance of the market in terms of momentum right there back in, what's this, February 15th, okay? And then the market did a correction all the way down here. And if you look at this move from here to here, from here to here, what do you guys think? Do you guys see that? Anyone see that? No, okay. Okay, yep, I just wanted you guys to see, just to see if you guys see that. A lot of people don't really understand that. They're not sure and they're thinking it's going to go through the roof and going to go on forever and therefore everything is lost. But that's not necessarily the case, but you can see, I'm just wanting to show you guys some sign. This is on a weekly chart. So this is probably one of the most reliable time frames, right? Daily, 4 hours, daily, weekly, definitely monthly, anything on a higher time frame, you can pretty much rely price action historically to provide the most accurate data for you. So when you see that, that's telling you we are getting there. And if we're not there, we're there now, right? So that's a good sign. In terms of the dollar, I'm letting them know what's going to be going on with the dollar. Okay, so right now, we're there from a sorry about that. Okay, so we're there from an exhausting standpoint, and we've been there, to be honest with you. This whole move was an exhausting move right there. That just basically all buy side liquidity. This is just one buy side liquidity inflated move that is historically just beyond extreme level, right? This is extreme market conditions, exhausting level. Now we have that up there, and we are now starting to see some divergence come to show up as we have this spike, but the market is flattened out here from the volume standpoint. So this is going to be key to watch within the next week, this week, and after. From a level standpoint, we did talk about, it says, hey, this is a high probability when it was right here. This is a high probability that the dollar could break 109, right? And if it does, this is going to be the peak of this zone, which is the 113, 114, I would say 114 level, okay? Now, the dollar coming up here to November 2001 level, December 2000, January 2002. Oh my God, that would be just insane 10-year level high, because after that, we're talking the highs of 1985, right? This is when Reagan was president at the time. This is the last time we've ever seen inflation that was like stupid high inflation. And the Fed just didn't raise interest rate, and then they finally start to raise interest rate, and they did it so fast, and it put the whole the economy into a recession, right? I don't think we're going to go there, right? Because if we got to see, this is 2002, and then we had the, right, remember this? This is the credit crisis of 2006. That just kind of bottomed the market in 2008. And then we have this session from 2008 to 2011, where the housing crisis put the bottom of the market in the dollar, right? This is where we saw that big, you would think that it was a big recession. It was a big fall, don't get me wrong, from here, 2006 to here. That was a big 20% decrease in the market that just brought the market down, right? Okay, that was 20%. It doesn't seem that much, but it was. It was 20% at that time, and that's all that was. I mean, it seemed that much because those who were, obviously during those credit crisis time, it seemed like it was just one hell of a drop of the market when it's only 20% in the dollar, right? The market has since recovered, right, through different presidency, Trump, Obama, and now the dollar's inflated to its highest level. And now the Feds are going to need to drop this in terms of the dollar power, right? They don't want people to be spending because it's just going to increase inflation. It has to stop. So they're going to definitely slap it down. So the question is, are they going to do it now, or they're going to wait till it gets to this high level and then go there, right? And that high level price, I want you to mark it on your calendar, or I want you to mark it on your chart, or you can also mark it on your paper in your notes here. This is the high of 120. The dollar at 120. Right now, the dollar is sitting at about 112. It gets to 120. And I want you to look at this. When we talked about this, right? So we talked about this angle, this 90-degree angle, and we talked about the 70-degree angle. This is that angle. Anytime you have market move in that much of a vertical movement and that sharp of movement, the stronger the pullback momentum that is going to happen. Okay. Now, a lot of people's not experienced to say, okay, is that really true? Well, yes. I just showed you guys the 50% move right here, from here to here. That was 50%. And that was when it came here, obviously it came up again, and it tried to go up, but the market definitely pulled all the way back to 50% level before it moved back up, and it did a double bottom from here, very strong level, and then it pushed up, okay? And I can tell you that 50%, look at this move here, these areas, and let's do a 50% movement from here, from this swing to that swing. And let me know if you think that is a significant area. Here, here, here. This is 50% right here. So anything in this area is 50%. The dollar will be coming back down to 101, 100. That is going to happen. And I've already stated it. I called it right here, but it pushed up, and my stance has not changed. In fact, it's even stronger to say that the dollar is going to come back even harder, right? And again, we're looking at some serious movement here that is most likely going to turn into a crash. And that's what we're going to see, okay? We haven't seen the bottom of this market since 2020, right? So it's been a couple of years since we've seen the bottom of the dollar, and now the dollar is at a historically high, extreme, inflatable insane, and I might also go ahead and add stupid level. This has no reason to be up here, right? So this fall, it's going to be great. It is coming, and I have not changed that stance. So it's like, do you long the dollar? And I hate when people do that. So to long the dollar means, should we continue to short Euro USD and pound USD? If you're scalping, you're just trying to get 10, 20 pip, 10, 20 pip or less, sure, you can. Just keep in point that you could be stopped out as much, or you can get that maybe any between 1 to 10, 20, 120 pips. That's about it. I'm banking on thousands of pips, right? And more importantly, I'm looking at total recovery. So there's no need for me to sit there and try to scalp, the Euro USD, pound USD, when I'm already in a reversion position to recover, right? So if you're not into this trade and you are scalping, I wouldn't scalp shorting. I just wouldn't do it. If I were just scalper, I think Euro USD would be the currency I would just not scalp. I'd scalp other currency, but Euro USD, pound USD, or anything USD related, I probably wouldn't be scalping those pairs. Okay. Okay. So that's what I have on the dollar. Getting here, is it possible? Yes. Probable, very low probability, but I would expect to see more dollar even correct at this level here, which is 103. In my opinion, I don't see the dollar going up that high probability. However, it is possible because it is at the higher end of this zone. It could come up to this level. It could push up and then do that fall. It could be here. Could have been here. Could it be here now? Or it can definitely be here, right? These are the three areas of where I feel that the dollar could eventually, it's like I said, it's not a matter of if, just a matter of when. This is where I would like to see the dollar reverse. It went past that. This is where I see it now. And if that, this is where it could go. Could go there. Because this is a very strong level here. So a very, very strong supply area, very, very strong historically and weekly and monthly resistance level. Very, very strong. Okay, this from here now to this area, the momentum to come in is going to be very, 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 very hard, because the path of least resistance is definitely all of these, right? All of this is so many resistance of market reaction that a lot of people are going to be starting to short now, right? And if they're scalping, you're going to get some people who are going to be buying and selling. They really don't know which way it's going to go. But for those smart traders, more institutional traders, more patient traders, swing traders, they are definitely banking on this to fall. Okay. All right, so that's on the dollar. Let's take a look at a couple of key correlated dollar market. For one would be the S&P 500, and then we'll go to the gold. Okay. So for S&P 500, and I know I talked about this, we're now back to, from the high correction to the 24% correction on the S&P 500 market, okay? Now, you see I have two levels here. High probability, low probability. We're already at 36.97. There's a very high probability. We are coming down to the bottom of, let me see, I would say the level of 2020, a couple of years ago, here to 3,400, if you will. So in this zone will be very, very key level. This is the area that if I want to start looking to buy, this is the area to do it, right here. So it gets in this area, you would want to get ready to buy. right? If you notice, I say get ready because you want to see this come down. You want to see that rejection. You want to see that retest. And then you may want to put something like a buy stop order to catch it on the way up, okay? If this break, these are two levels that I see. This level here, and then this level right here. There's probability. It's very, very low, but it is possible if it continues to go. Now, for this market to continue to fall, continue to fall, continue to fall, that means also that the dollar would need to continue to rise, continue to rise, continue to rise. Bond yield would need to continue to rise, and then the stock market just continue to fall. But historically, the stock market, like this fall right here, this is the very, very key fall here. This was a 34% correction, right? And this was, and what we're talking about, February 2020, which was when the COVID situation was announced. And then we had this correction. This was more of a, it looked like it was a 52% correction here. Let's see here, was a 22%. So we're averaging around 35% correction. And there's more, right? If you look back, and I believe from what I remember from my notes, it's around 30 to 35. 27 is when it's kind of common, but 30 and 35 would be extreme in terms of market correction. And I'm talking about the S&P 500 as a whole, right? So the S&P 500 has already seen a 24% correction. If it goes down to my high probability target, that would be a 29% correction. If it goes to my very low probability target, and that would be an extreme, that would be 39% correction, which would be the highest end of a correction of a bull market to the overall S&P 500. We're talking about S&P, which is the biggest index that gives you the precursor of the overall stock market, right? That would be extreme. And if it does go there, that would be the extreme level. Coming all the way down here to give a historical correction of 54% would be, I don't know what would take to get that level. Could be World War III, could be anything like that in that nature. I doubt if we can go there. I highly, highly doubt it. My probability from my experience, well, this would be even doubtful, probable, but very, very doubtful to even come this low to September 18th level. Low was level 2020, which would give you a 39%, but this is very high probability of 29% as the market is to come in. It's bearish right now, obviously. It broke out of this channel. It gave us a little bit of a high bull potential, and then it smacked all the way back down to its previous swing low of June 2022, right? Several months ago, we're back at that level. And if the market continues to push, we are looking at this level. And in my best estimate, that's when we should be seeing a break out of that to finally come back to a bull run. Okay, because I thought this was going to be a bull run here, but nope, it didn't prove that. It broke that level and it started to come back down, and we're going back to the extreme low level of the market again. But we need to see this break up, and we need to see it above that. But I think it's going to come to this level, and that is a very high probability. Again, if we see that, then I'll be looking to buy, and I would buy here, and I will also buy here. This is very, very good areas to buy. to take advantage of the S&P 500. US 30 would be the same way, and also NASDAQ would be the same way. Shorting it would be good to about right here, and anything here would be extreme risky. Shorting it to here would be a good probability win scalp trade. For S&P, US 30, and NAS, it's definitely a bearish market right now. This is a good probability short scalp trade, but to short it from here to here would be very, very risky, right? Because the momentum will be more to the buy side and more of looking for that bottom of the indices market. Okay. Okay, going to gold. Let's take a look at gold. Okay, so this is on a weekly. There's a couple key levels. If you haven't seen, if you haven't watched any of the recordings or came to the live sessions in the last couple of weeks, I've marked up my charts here. Here's the key thing that I marked up. Now, this key level was a very strong support level. This is on a weekly on gold. This was a very strong support level of 2020, right? We had some very, very strong support level that I would say a lot of people are like, no way, this is not going to break. And if it does, it's going to drop. And it broke. That's exactly what it did. It did break. And so now we're looking at, okay, so how far could the dollar drop? I mean, gold drop? And I dropped some specific levels here. Just obviously this trend line here. Get that out. This imbalance was pretty much covered, and we still got this trend line. So this is a nice trend line. So once gold gets on that other side of this trend line, this is more bearish side. This is more bullish side, right? And we need price for gold to hit on the other side of this trend line for us to even think about us saying that this is now looking bullish, right? We're not even there yet. So right now we have this push of the break, of course, the upside push on the dollar, push down gold, and it is a very strong push down. Now, this is a very high probability level, and it's a high probability zone. So anything between, let me see here, 1610 and 1577 is a very, very, very strong area to buy. I even called it right here. Right here is a good time to buy. But that was a very small trade you should put. Now, you're probably in drawdown now if you did, and still, this is it's a good buy. This was a good buy. It's not a bad trade. It was a good buy. And I think anybody would have bought the bottom that said, this is a very good place to buy. If you want to buy, this would be a good place to buy. Not a very good place to sell, right? Anything from here on now is gambling if you're shorting anything. But from here, if you're shorting, when you got the market looking that exhausted, look at that. Are you going to tell me you're going to sell now? You should have sold up here. You should have sold when it was right here, which is here, here, and here. Not here. This is not where you want to sell. This is where you want to look for possibility that the market is eventually going to come back up. We all know what goes up, comes down, goes down, comes up, what goes up, comes down. You know what's next. I think everyone knows that. So the question is when? And so these are the two targets that we're looking at that where price could potentially come here and bounce back over this trend line, maybe back into this area of support. Obviously, this would be revisited again, possibly come back and then break, or is it going to come here and do that same move? Or this is a very low probability, right? And make that move. So these areas where price for gold could be bouncing back. So anytime now, anytime in the near future, very low probability. Again, this is for if the dollar continues to shoot to that 120 historical level, that's when we would see a potential for, to go that low. Now, trading this level, it depends on how much you're in the trades. If you're already in the trade, then you want to go ahead and start planning out your trades in those levels, right? That could be turning back. Because here's the thing, is gold going to come back to this level? The answer is yes. Is going to come back to this level? The answer is yes, and it's definitely going to come back to this level. And I would agree with that. Now, is it going to be here? Is it going to be here? It's here. Those are the possibilities. High probability. This is the high probability buy zone, not a sell zone. This is not what you want to sell. You want to sell tops. You want to buy bottoms, right? You're anticipating, based on the price movements and the price actions of key levels, of where price will need to mitigate to come back to previous key levels where it was selling for liquidity, right? Markets push down to buy up. Okay, just be aware of that. So those are the key areas that I'm looking. Scalping gold will be, from here. I think anything down from here, it's just risky, right? This is just extreme level. And the reason why I say extreme level, just take for instance here. If you were to put the fib from this swing to that swing, you would say, okay, listen, okay, this is a swing low of the market at this point, and this is the swing high of the market. Now the market's going to come back down. There's 50% there. It's going to come back down to the 618 and probably reverse there. It's going to come down to the 786. That's going to reverse there, and it could come up to the 886. That would be crazy if it doesn't. Well, guess what? It did, and it went 100% of the Fibonacci move. Now, any of these levels were very, very good key strong probability for a high level trade play out for the up to the upside. But now we're at the 100% and we exceeded that 100%. That happened basically only 12% of the time. But when it does, it will break, and then the next level, obviously here and here, a higher probability of even going further. Okay, the more you got to think about it, the further the ball bounces, right? You think about as this is the ground. If the ball dropped from here, you're going to probably get a small bounce. If the ball bounces from this level, right up here, you're going to get a higher bounce. Hope that makes sense. That's really how the Fibonacci reversals retracement works. The higher the fall, the larger the recoil, the larger the bounce back. Okay, now that's in theory, right? It's not Leonard's theory. It's not what I say to believe. It's all to be holy thou, and I'm 100% accurate to the truth, and there's no other explanation. No, that is in theory, but the theory is pretty much high probability. From my experience, from what I've taught, from what I've learned, and what I've seen over the years, that happens. So when you see higher highs, higher lows, and you seeing this on a weekly chart, oh my, when gold does shoot up, it's going to be a nice ride. Okay, so if you're here, you bought, don't be afraid, get ready to buy again, and buy one more before you even get to this level, and you just start to consider maybe some hedge point that we talked about in our trading, where you get into the hedge zone to do a slight hedge if you have to, so that when the market does correct, you can start banking some pips while you're in that low correction of the drawdown. Okay, so that's gold. So gold's at a key low level, just much inverse to the dollar. And we're at some key levels here to where we need to see some reaction here. We're most likely going to see a reaction here. Low probability of it coming down here, but if it does, this is going to be a very, very key and high probability of a reversal, right? Here, that's part one. This is scenario part two. This is very low probability, but that is scenario three, okay? Okay, let's go to Bitcoin. Bitcoin is the other dollar inverse correlated. Now, I've marked some levels here. We got some very strong demand support level. This is medium probability, very low probability, right? Right now, we have, go to the daily. We have Bitcoin right now at 18.8, which is closer to the previous low, which was 18.1. The probability of Bitcoin dropping to, wow, 17 is insane. I don't see it going that low. It's a medium probability, but if it goes, it is below this key level here, which is the 19.6 level, 19.68. Bitcoin doesn't drop and doesn't pump up over that. It all comes to the dollar and the indices market. We could see Bitcoin range in here before it pops up, okay? Or it can range in there and then come back down and range in this level before it pops up. And if it doesn't, we could, very low probability, see this level before Bitcoin pops up, okay? Now, again, this is almost like gold. This is a very key level for the Bitcoin bounce or reversal. This is a very key level, and this is key level. So this is scenario number one, scenario number two, scenario number three. How do you play it? You play all of it. Why play one? What you're gonna do? You're gonna go long here, stop out. You're gonna go long here and stop out. You're gonna go, you may not even take that third trade. You just stopped out so many times. You're just like, I don't know what it's going to do. You play all level. You buy now, it drops. You buy now, it drops. You buy now, and when it bounces, cash out, cash out, cash out. Okay, so that's important, and that's where I see gold. I mean, Bitcoin. You got to think. Bitcoin has now taken a 72% correction. This is greater than $1. This is greater than yen. This is greater than S&P 500. We just saw the 27, 28% on S&P 500. This is 72% correction. You think Bitcoin is going to do another 72%? It's going to bottom out then, right? Which hasn't happened. I'm not saying that's going to happen, but there's a very low probability we're going to see more correction to this level of 14,000. That is dead, crazy, insane. We're talking close to 80% correction on Bitcoin. We haven't seen that in years, if ever, right? So we're at a very key level, and these are very key support level to where corrections and reversals are coming, right? And it's going to be very, very pleasing to see eventually when Bitcoin gets to 30, and eventually the 38, 39, back to 40, 50, 60, 75, 100,000, right? That's where I'm still a Bitcoin enthusiast, I'm crypto enthusiast, and I believe that the death of Bitcoin, obviously, I don't believe in those sentiments to believe the Bitcoin and cryptocurrency gone forever. They always say every time Bitcoin gets in that correction level here, correction here, and they called it when Bitcoin was down here, that Bitcoin was over, and it's not, right? We're going to be seeing Bitcoin halving is coming up. That's going to be a big deal. And we're going to probably see Bitcoin shoot way over 80%, 80,000, 70,000, 60,000. So this will be a full recovery. It's going to be a slow recovery, but it will be a recovery. But we can say that right now, Bitcoin is at a very, very strong support level. As you can see, has not dropped as much, right? It's been, just look at this cluster here versus this. This was a little bit of range and then it dropped. Range up, range up, range up, range down, range down, range down, and it's in that range. It has been in this range right here, this range. And it's been in this range since June, okay? We're still in that range. And this is the range where I see Bitcoin going to be here for a little bit until the dollar drops, the market recovers, and we're going to see Bitcoin. When that dollar drops, gold shoots up, and indices starts to correct, then you're going to see that breakout. You're going to see a range, you're going to see that breakout, you're going to see that range, you're going to see that breakout. Okay, I believe you're going to see more of that than possibly more of this. Okay, so that's Bitcoin. Okay, let's go to the other currencies real quick. The dollar crosses. It's easy, you already know, as the dollar's strong. We got Euro USD at crazy below parity level. And I believe it's going to go up. When? That's the key. Let's go here to Saxo Paint. Okay, let me zoom out here to the weekly. Okay, so there is some key levels here, and I want to make sure that I point this out. Boy, this has been one crazy year of a market to see this much of historical trend and for this long, right? Right now, we got Euro USD sitting right at 96 cents to the dollar. Crazy, right? This right here was high probability point. This is high probability support. And right here we have very low probability. This is Euro USD. Low probability. This is an area where you want to buy. I know it sounds crazy. And you can say, well, you don't see that falling. Yeah, but if you wanted to sell, you should be selling up here, right? I believe I started selling about right this level, which I did not see 100% of the retracement, like from this swing high right here. I was banking on all this, and it blew past all of that, and it came all the way down. And the war did not help it, you know, and the energy crisis and inflation did not help my case. Look at this, this is crazy, right? Now, did it work before? Yeah, worked right here. Came all the way down to the 886. Did really great, right? How about right here? The swing high, the swing low. It's kind of, well, just kind of went above 100%, but then it recovered real nice. Then you have this right here. What about this? This swing high, this swing low. Came back all the way down to what? Key level. Look right to the T, 886. Did a nice drop. Then you flip that over to the other side and said, okay, that was a swing high. This is a swing low. All right, come on, 786, 886, reversal, 618, start to look. It did pull back to the 50 and then drop. Just pull back, and then it came to the 100% and said, nope, and it just came all the way down. So now we're looking at what were the extreme levels of the market for Euro USD, and these are the levels right here. Right now is at 96. We could possibly see 88 cents if we do not see the market hold this level. If it breaks this level and the dollar keep going strong, and we're seeing more European concerns or war and stuff like that, that is a possibility we see 88 cents. But I got to tell you, folks, when you see this much of exhaustion, you just basically just want to hold out. Just hold out. Anything in this level, just hold out, because it's coming. It will come. We will see price come back to this level of 105. That will come. We will see prices come back up to 120. It will come. But right now, the market has pushed to its overall level of exhaustion for many of the economic and geopolitical situations that we just called. This is, to me, this is almost like the year of patience. I've never had to be this much patient in trading in all of my years, right? This is the most extreme patience I've ever had to been. And it's become more of a frustration, if anything. And you just got to maintain sanity that goes, you know what? My trading hasn't changed. The strategy hasn't changed. The method hasn't changed. It's the market condition that's been changing, right? And the only thing you can do is adapt to it by scalping maybe other pairs, small pairs, right? Or exercise extreme patience and stand your ground, because it's coming, right? We're going to look at some JPY pairs in a minute, and you're going to know exactly what I'm talking about. But that's what I'm seeing for Euro USD. Pound USD is going to be the same. It's historical, crazy low level. Pound USD, let's get some data here. Look at this. This is the most data I can get from an annual perspective or monthly perspective. Let's go to monthly. On Saxo Bank, which is a really good data provider, since 2002, right? Now, of course, there's more data, but as far as 2002, we're at the lowest historical market we've ever been. I have basically no other reference point, unless I get some other crazy data. I can't even get, I don't think there's any other enough data I can get. This is it. Okay, this is 94. All right, 93. Got something there. How much longer? It's not going to give me the A caps. Yeah, A cap about the 94 as far as I can go. My global prime. Nope, not even that. Okay, let's just go with A cap. So A cap broker and provider, price provider, can give me go as far as 1994. Okay, this is the history of pound USD. And you're looking at that and you're going, wow, that is insane. At that key level of the bottom of the market, it finally broke that crazy strong support level of 114. And now it's sitting at basically 108 and approaching parity for the first time in history for the pound since 1994, what we're looking at, or 93. I would say most MetaTrader 4 brokers don't even give you this much history. TradingView is probably the only way you can go and look at the equilibrium of the price here. Went up to the top range, the bottom range, went back to the middle, and we're way back down to some crazy level I've never seen in a very, very, very long time. And obviously this is like historical low that I've never seen. And this is the longest I've seen it hold this level. It came this level within the next month, it was back up, came back down, came back up. This was how the market operated, right? It went to this level and now it even pushed even more. So the question to you is, do we sell now? No, you should have been buying. It's dropping, why am I buying? Because you're not going to sell the bottom of the market. You're not going to sell here. You should never think about even selling up here. You should never think about selling the lows. You should never sell, right? Even right here, this was a low of that market. It dropped. Yes, it did. But did it came back up? It came back up even enough to break you even on that trade. If you would have bought here, you would have cashed out on this one. You would have cashed out on this one. And if you didn't make this one, you could take that with an easy net loss, small loss, but your net would have been a net gain from these two trades here because you built into your position. Now this is, we're talking almost 8 months correction, right? 8 months. This is a monthly chart. This is the lowest I've ever seen pound USD this low. And I got to tell you, yeah, I'm bullish. I want to see, and I'm going to see pound USD come back to 1.33, right? And in the future, this is what I even see pound even doing in the future. Coming back to this level of 1.71 sometime in the future, okay? But as of right now, could it come up to 133? Yep, within the next probably 6 months. But I would definitely see us coming back to this level right here. 1.22 is all I need for some of my trades, right? And I can break even right there. I've been shorting it since at the bottom of this level. I've been doing the right thing. I've been shorting. I've been longing, buying the lows. It's what you want to do. You don't want to short this. This is not expected. This is not normal. This is historically abnormal market conditions, plain and simple, right? So you don't have any historical level to the left. Obviously, there's nothing here. Everything has to be mitigated back up there. This is where prices and price is in balance, right? Let's go down to weekly level. This is imbalance. You got imbalances here. You got imbalances here. You got imbalances here. You got a lot of imbalance that's got to come up here to be mitigated. All this got to be mitigated, right? So we know this is going to eventually come. But we all know that. There's none of us in here that says it's not going to come back up. There's none of us in here that says this is not the right time to sell. We should be looking to buy, especially when you're seeing the market here. Everyone who knows the market and the episode of the market has been through my training, who's been watching me trade, who's been watching these analysis, know that I would not want to sell that. There's no potential, any reason why the market needs to continue to push down. And continue to push down that has already been doing for the last 12 months minimum. You're going to keep taking that chance. I wouldn't trade via micro, but I wouldn't be trading for anything big pips. You're not going to get another 2,000 pips going down. not at this historical level, right? Okay, so let's go to take a couple closer to the other pairs. Let's just look at AUD/USD and NCD/USD real quick. So they're both kind of similar. AUD/USD, NCD/USD, again, approaching to key levels again. I would say I would expect to see AUD/USD calm down. And let's get ready to buy. To me, this is all buy level right here. I don't think it's going to come this low down to not on my weekly chart. I don't see it coming all the way this low already. Not when it's already exhausted. Okay. And this is AUD/USD. Okay. NCD/USD is going to be the same looking chart. Take a look. Got this all marked up. Look at medium probability. We're already there. So this option 1 has already been pulled. This is option number 2. This is option or scenario number 3. I'm telling you, folks, I'm telling you, I swear it didn't go up here. Okay, fine. It could go now, and it's more higher probability of that bouncing up and reversing on the other side of the trend line than it is to go down. If it does go down, this is the ultimate probability we are going to see the biggest upside push and recovery we've ever seen. Okay, and I hate to say it, it may need to take a dollar crash. It may need to take a US recession, unfortunately, to see that type of move. I don't know. But when you see prices this low and NCD and AUD and EURUSD and pound USD at a historical record level, dollar, you have no reason being up that far, especially when the market is exhausted and and overbought in every way. Okay, let's go to USD CAD and USD SHA. Here's USD CAD. Woo! Look at that breakout of that trend line. And it went to my medium probability level of 1.36. So that was scenario number 1. This is scenario number 2. This is where we're at. Okay, so scenario number 1, if you sold it here, guess what? It's time to buy. I mean, it's time to sell. It's definitely time to sell. I was short it. I'm already in draw now. I was short it again. If you do not short it, you're going to have big opportunity you're going to miss. You're going to be like, man, I missed this short of 210 pips because I was afraid. I was scared because it could go up. Yeah, it could. See, that's exactly what I'm talking about. It could go up. Yeah, and it will come down. Right? Let's see. Let's see here. I am going to call this level right here. Let's see what that is from. Come this swing here. 50% is right here. Ooh, that is a very strong level. Okay, so I see US CAD. If it goes up this high, it's going to come here. If it reverses now, then I see it come here. Okay, we will see US CAD drop. That is going to happen. The question is when? I don't know. It could come now. It could push up a little bit more. I don't see it coming here of 2020. This is very low probability that we could see prices come here of 02. Let's use Saxo Bank. This was back in 01, way back in 1986. We're at a very key medium level price, which we could see USD CAD push up a little bit more before it falls. Okay, go back to the daily. So now that the price breaks, we're going to come to this level right here. This is where we're going to see the next level, which is 139. So I would say definitely you want to hold and hold for your horses and bank on the crash of US dollar. The market is it's definitely at a high level. This is where it was at right here, right? If it gets to this level, anything above here, I would say I'd be putting full standard shorting. This is how serious I'll be looking to short the dollar CAD. Okay, we are going to see dollar CAD fall. I just don't know when. I can only see key levels, and I'm looking at dollars, and I'm looking at some key levels of saying, hey, dollar could push here and fall. Dollar could push here and fall. It gets above here. This is when it's any time now. But I don't see that happening until we get to this level first. Okay, that's USD CAD and USD chef. All right, USD chef. Look at this. Go to the daily. We're at a very high probability of where USD chef should be looking to short anytime now. Okay, if USD chef gets up here in this level, this is where you want to short it again. This is back where it was at. Okay, the dollar is pushing up to extreme level. Let's go here and go to the monthly historical levels for USD Swiss francs. USD Swiss francs typically trades below 103. Okay, Swiss francs has not been above 103 since 2010 and beyond. Okay, US Swiss francs used to be a very strong currency to the dollar, but now, because it's a safe haven currency to the dollar, right now it's going towards that level, historical level. Market is already overbought. It is any time now. It needs to be corrected. And I would say right now it's the time to, like I said, we get to this level, high probability, supply level, this is the time to short. This is not the time to short down here, not down here. Right here are good areas, very good setups, very good high probability setup to short USD chef. This is going to be a nice trade when it falls. Okay, and we're looking at these key levels down here and these key levels here. This is about as far as I can see it drop. I don't see it drop below that, but it could. But if it starts getting right here, this is what I would want to sell. I would want to now start to buy. I want to buy here. This is not where I want to start to sell. I would want to buy, and I'll buy here, and I'll buy here. Okay, but right now, this is a good area to start looking to short USD chef. Okay, let's go to USD JPY. USD JPY, look at this. Oh my God, this is going to be a nice one. Let's go to the monthly. Put some more data here. All right. Okay, so this is the historical price of what I got from Saxo Bank, all the way back dating to 1986 for USD JPY. Okay. USD JPY right now is sitting at 143 of a historical price of 1998. We're looking at a 24-year record high. We should definitely start to buy now. No, please do not start to think we need to buy. We need to put everything we can and hold for dear life, because this is going to drop. And this is going to be a nice fall from here to this level. I just put the Fibonacci from here to the swing high, swing low, swing high. And we're talking about a 50% snapback. Why would that be a freaking significance? That is 50% level right here. What else we have here? Oh, we got this historical price there. We got historical prices level here. And we got some historical resistance there that is now support since 2001, November 2001, May 2007, March of 2015. Do you think it's going to come back here? Absolutely. And I am so much waiting for it. Okay. This is where I am selling JPY for everything I would have, and I would sell and hold. Okay. This is a good place to sell. Good place to sell. It could come here, right? This is where I start to look for buying to go up. But I think the USD JPY has a potential to come all the way down here. Down here, this level. So to be honest with you, once USD JPY gets here, I'm not even looking to buy until it starts dropping around 786, because we could see, look, and I'm already past this point. I'm not even worried about this. People are still like, huh? Dude, it hasn't even dropped yet. Oh, I know it's going to drop. That's why I'm not even looking at it. Oh, okay. You're that sure? I am that historically sure. From a price action standpoint, yes, it's going to drop. I'm looking at what it's going to do after it drops. I'm already counting this. This is cash. I'm cashing out right there, right? I'm looking at what it's going to do 3 to 6 months down the line. I'm not even looking what's happened for the week. That's just how sure that I know it's going to drop. It's just a matter of when. So when it drops, what am I going to do next? I'm looking at what I'm going to do 3 to 6 months and position myself. I am going to start looking to buy right here. That's when I start to look for buy USD. And guess what? It may come all the way down here. Happens 12% of the time, because this is my 100% level of the fib sequence. It goes here. I'd be disappointed, frustrated, but this is when you want to start placing buys. Just like that. I'll put a buy here, put a buy there, put a buy there, put a buy there, because I'm looking for that going up, going up, going up. I'm already looking at buying. It's like now, oh no, I'm not looking at buying now. I'm looking at buying in the future. Right? I know this is going to drop. Let's look at a lower time frame. Let's look at the 4 hour. The dollar has shot up, and this is as far as it's pushed USD JPY. That's because the pound has been stronger, right? It had the Japanese intervened and pushed this all the way back down to 140. We haven't seen 140 since the beginning of the month when we went above this level. So I'm looking for this to stay below that level and bounce back or range around this level. I do not see USJPY breaking this level or breaking historical USD JPY level. There's all this right here, this key supply level. This is all in the premium area to sell. Okay, that's USD JPY. Right now, it's looking kind of bullish. I'd be looking to start shorting it now. This was a good time to short. Look like it's giving us another opportunity to short. I would place a pending sell here at 145 and place it right there. If you had a sell up here, I would have cashed out. If you missed that, don't worry, hold on to it. Get ready to put another sell right there. Okay, that's USD JPY. Let's go to the other JPY pairs. Let's look at Euro JPY. Look at that one. So wait, hold on. Back up, wait. When it was right here, I remember you saying that it was going to go 50%, but I wasn't believing you because USJPY was shooting through the roof. It had already, from the downswing of that move, made 973 pips, and you were calling it short at that level. And I was like, no way. And you even said something about 50%. I keep hearing that from the swing low, swing high, that 50% snapback. You had drawn your level around this area to say USJPY is going to be coming around this area. Right? That was my area. That was my zone. That's where I called. And I said, you know, we're going to see USJPY fall back in that area. I called it. Did it go? You tell me. It surpassed it. It went all the way down to the 618, closer to the 786. If you would have shorted your JPY when I called it, you would have got a 667 pip move. Okay, that's what I'm calling for Euro USD, pound USD, and odd USD. Same thing. I'm calling it back up. This is the inverse. Of course, that's for USD, but you saw how stubborn for USJPY was. Okay, let's look at pound JPY. Look at that one. Look at that move. Anyone want 1,268 pips on pound JPY? A lot of people made money. This was a nice drop on pound JPY. This was the best trade of last week. Of course, I didn't get into it because I'm holding other pairs, but this was the best trade setup. And I call this out as a nice short. Okay. So that was pound JPY. Here's the other pairs, Chef JPY. Look at that one. This trade is not even over yet. It's giving you another opportunity to short it. Chef JPY, let me go to the monthly. You can get some more data here. Go to another source here, Saxo Bank. Chef JPY, I told people for weeks, short it. Short this pair like it ain't no tomorrow. 2014 high. We're almost there. People scared as their living death. I said, man, I'm gonna blow my account. There's no way in hell. Okay, this is where we're at right now. We have not seen the movement down here where I'm calling it of 109. Hasn't come down yet, but guess what? You still got a chance to get into this trade. You still got a chance. Go down to the daily. You've already missed the 815 pip dropped. It bounced back 276 pip. Guess what? Good opportunity to start looking for sells. Now, and put one more pin in right at the top. Why not? Just in case it comes back up. But I'm going to be in drawdown. Are you serious? You want to put a stop loss up here instead and get out? You know it's going down. We just called it. You saw what happened to EJ. You saw what happened to GJ. it's giving you a pre-story preview of what's going to happen with Chef JPY. It's coming. Okay, Chef JPY. Look at that move. Look at that. 90 to 70 degrees, 50%. Let's put it up here. This swing low. Here, it's coming. That's target. Put a small position in. Get an opportunity. Next pair, CAD JPY. Historical level. I called it medium probability. Very low probability, but I wouldn't just short it even there. 50% level right here. Are we there yet? No, not quite. But we had a 600 pip drop. On Thursday and Friday. This trade is not over yet. Chef JPY, CAD JPY, still an opportunity to short it. Oh yeah, last week, you're right, Brian, last week, great time. But this trade is not over yet. We still got another 720 pips, okay? I've waited so long for this. I'm just gonna wait and just cash out all of it, you know, just get out of this trade, okay? Historical level, right? I said this right here back in 07. If it does that, medium probability, very, very low probability to get back to this level, right? Historical, this is historical. This is, this is this Saxo Bank. Yeah, right here. This is historical record high level. Look at it, no freaking way probability. This is what I put it right here. Very high probability, low probability. No freaking way probability. Took a 600, hit the low probability, hit 600 pip drop. Thank you. Thank you very much. You go back to you go back to what, 07 level, historical price level for CAD JPY. You're in the upper end of the market. You're closer to the ceiling than you've ever been. You don't want to buy there. You surely want to sell, right? Because we're going to come down here. We're going to see 91. It's going to drop from this low probability level. It's going to drop to 2,000 pips. It's coming to a chart near you or account near you if you're in it. Okay? CAD JPY, really, really good trade setups. Folks, I'm really excited about those pairs, and I'll be very excited when Euro USD, Pound USD does the same damn thing. It's coming. Okay. NCD JPY and RJPY, let's take a look at those. Just kind of correlated NCD JPY, where we saw here, we went to this level, we saw a nice 504 pip drop. Folks, it's looking really, really good. This is, we go to the weekly. I have marked out my level, saying this is a medium probability, this is very low probability. They want medium probability and drop 540 pips. This is where it's going to come down to 75. This trade is not over yet. We still got another 600 pips in the tank. Okay. If you sold up here, great, cash out, reload. Okay. If you have not sold, I would not actually get into a sell right here, not with this push. I probably would put like a nice sell limit order at 85. Yeah, and put another one up here. 87, right? You can put, if you want to go sell here, go like a micro, and then put your standard trade here at 85, and then put another standard position at your 87, and hope that God comes back and tag you, because baby, we're going, right? We still got another 646 pip to go. Okay, that's my target before we could be here, but I'm not looking to buy. We've been in JPY. We should have been buying JPY for all these times. Well, we've been looking for sell because JPY has been pushing for so long that I'm not even thinking about buying anything in JPY until next year, and that's when it's going to most likely come here and here. Okay, our JPY is in the same level, right? They're both correlated, right? We saw a nice correction here for our JPY for 571 pips, and we're not there yet, right? This is my target right here. We still got another 519 pips. Bring it on, baby. And then I get all of my RJPY and my CAD JPY. I get all of my CAD and get all my odd pairs. I'm going to cut out net profit. Okay. Is RJPY going to drop? Yes, I think it's going to even drop even further. We're talking about another 1,300 pips. And be honest with you, I do see PR target number 3, which is another 2,000 pips. Okay. Yes, I believe those targets are coming. And believe it or not, I'm not looking to buy until it even gets down here, right? This is when I even start to consider buying. Get another 1,300 pips, get down to the bottom level, and I'll buy you at the bottom. I'm not buying you at the top. I wasn't buying you here. I wasn't buying you here. And sure ain't buying your ass right now. You're gonna have to drop for me, baby, before I buy you. All right? Because you're not even looking sexy until you drop it. Drop it like it's hot, baby. When you drop it, that's when you look sexy for me to buy you. Right now, I gotta sell you. You too hot. You way too high. Way too overvalued. That's like that. Hope you're thinking the same way, because if you are, you're on the right level and the right side of the track for trading. Okay. So that's NCJPY, CAD-JPY. I'm going to look at a couple more pairs, guys, for Euro CAD and Pound CAD to see where we're at. And I want you guys to see some good probability setups. Euro CAD. Good time to buy. Still a good time to buy. Okay. This is a weekly. This is a monthly. This is the overall market. Look at that. If I bunch it up like that, you can just see this, like, you can think about it like this. Just keep it simple. Okay. That's the market. Up, down, swing up. Okay. That's what I'm seeing. Put it back. That's on the monthly level. Let's go to the weekly. What do you guys think? We sell now? No, sir. No, thank you. We'll buy. This is a trend line. You can buy now, or you can wait till the trend line break and be extra conservative, because we are going to see 144 Euro CAD. We will see 149 Euro CAD, and we will see 155 Euro CAD. I'm bullish. Pound CAD. Go to the monthly. Let's look at a historical level. We are at the bottom of the historical record since 2000. Let's get some more data here. Let's go to like Saxo Bank, Swiss banks. Look at that. This is historical level since 1990. This is the ceiling. This is the floor. Ooh, I think we have the floor. Yeah. Okay, so we sell now, right? This is a good time to sell. When the market is awesome like this is where we sell, right? We do with retail traders, right? We sell when it's falling. I don't think so. We should be looking to buy. If you don't have buys in, put a buy in now. If you haven't put a buy in last week, put a buy in now, please. This is record level pound CAD. That pound CAD had never, in the history of pound CAD, as far as we can see, since 1990. Let's see if we get a little bit more data. Nope, that's the furthest we're going to be able to get from Saxo Bank. Thank you. Since 1990, as of right now, from the historical price level data that we can get, no, we'll go as far as maybe 89. Let's do 1990. We've never been that low. If you don't have it on your chart right now, if you don't have it on your list to sell, to buy pound CAD, what are you waiting for? Look, here to here. Go weekly. Go back to Saxo Bank. How's that for you? $34-year record low level price. 1990, 32 years. 32 years. Sorry. 32 years record low level price since 1990. This is what we were waiting for to sell. No, please. We should have been buying. There's a lot of imbalance here. We will come up. We will mitigate. This is a good place to buy. This is where you want to be. We will see prices come up. Okay, so this is what we're looking at. We're looking at price anywhere from here to here, 875 pips, 1,253 pips, 1,668 pips. Okay, this is what we want to see. Anytime now. Anytime now. If you've been selling, buying, if you've been buying since here, let's say right down, that's good. All this is buy. You should have bought there, you could have bought there, and you should get ready to buy now. Good place to buy, pound CAD, okay? We're looking at a good, let's say it comes to this level. Let's say it's come to this level right here. 1,225 pips, we're good to go, okay? I could see that happening within the next week or two. Pound CAD, CAD's gonna get weak. Okay, it's gonna get weak. And when it does, CAD JPY, pound CAD, Euro CAD are going to shoot up, okay? That's going to be very, very impressive. Okay, pound odd, Euro odd, same thing. I believe we are at historical level. Yes, you should be bullish. You should be buying. This is your odd on a weekly. Right now it went up. You may want to put a pending buy now down here. Wait for it to come back. If you didn't buy here, this is not the time to buy now because it look. Lower lows, lower highs, equal low. It's coming back. Put another pending buy right here about 145. You can even put another pending buy here at 142 and let it come down and come back up. But I think we are pretty much bottomed out on your odd, pound odd, same darn difference. Look at this. This is all buy zone, right? And it pushed down because we have pound that was weaker. That's fine if you're in drawdown. I would say get ready to put another buy here at 1.61. If you don't buy now, put one now, and then put another one at 1.61, 1.62. Okay. That's what I see. This is historical price on the weekly chart. Go to monthly so you guys can see it clearly. This is the historical monthly price on pound odd. Way up here to way down here, came back up 50%, 50% level, right? Let's drop 50%, came back down, not 100%, like maybe 8186, come up to 6186, kind of come back down. This is what I'm talking about. From here to here, came greater than 50%, 618. And then it created this top. And then he flipped this over and do this. So from swing down, swing up, let's see, right here. It came back down to 886 and flipped up. Okay, now we're going to flip this over. And look where it bounced back up. It bounced back up to 786, right? Swing low, swing high, swing low. It came up to 786 and bounced. Okay, now we flip this over. This is the swing high. This is a swing low. This is 50% level right here. It's coming back. It has not even reached there yet. Okay, we're at that level right now. If pound push a little bit more, which is possible, I'm still be in a bullish setup looking for buys to come back up here to 50% level of 786. This is a nice setup. From here to here, that's 1,912 pips, or you can wait till here and take it up to here to 1,992 pips. Pound odd, we should be looking for buys. It's already in a prime area since it dropped. So your CAD, pound CAD, euro odd, pound odd, you should be looking to buys. Even more importantly to buy. Okay, euro NCD and pound NCD is a little bit different. Okay, just a little bit. You should have been bought here. I wouldn't buy now. You may want to put a pending buy here for euro NCD, 1.61. Anywhere in this level, 1.61, you can go ahead and go 1.58, that's fine. But we are going to see euro NCD come back up here to 1.89. How many pips is that from right here? 2,000 pips. Okay, if it drops right here, if it drops from right now to about 1.61, that's 718 pips. Buy. Don't buy now. Buy when it drops to 1.61, and then put another pending order around 1.56. Hell, I even go one more pending buy right here, 1.59. I swear to God, I hope it gives it to me, because that's what you want. you want it to come down here, snag you, and take you up, or come back down here and take this one and take you up, and hope to God, pray it come down here and take you up, because that's even a better price to cash out, and just be patient. You make that money. Just make that money. I'm telling you guys, this is a great time. This is how you should trade it. Is it going to be in drawdown? Yes, it could be in drawdown. Yeah, absolutely. If you put a buy right here and it buys you up, you could be in a drawdown. If it goes right here, it buys you up. It could be a drawdown, buys you up, but your reward is going to be much, much, much worth it for the patience. What you don't want to do is put a buy here and put a stop loss, put a buy here and put a stop loss. Just not making any sense, because by the time you make it up, you got to make up for the losses that you've had. You got to make up for the emotional losses that you've already taken to buy this up. Okay, you're buying in the bottom of the market. We want to be reversion market traders. When you're day swing trading, this is what you're doing. You're looking for big pips. You're selling the highs. You're buying the lows. You're selling the highs. You're buying the lows. And if you're not right, if you're not perfect, and the market wants to go further than what it normally does in a normal operation due for whatever political, geopolitical, economical reasons, you should be trading small and cost averaging and building your position into using your equity to give you more time. Okay, that's what we talked about in our training. Okay, pound NCD, same difference, guys. Look at this. This is what I called last week. This is a high probability. I hope you guys have a pending order here. If not, put it in there. Pound NCD 1.86. Mark it on your sheet. Put another pending order for 1.82 and put another pending order for buys. Want to buy for 1.74. What that look like? Well, that looks like a 216 pip drop first before you take your first buy. Hopefully it fills you in. If not, it could drop again, 433 pips. Ooh, yep, drawdown. And if it goes against you further than that, it'll go another 795 pip drop and drawdown. Yes. From here, you're looking at a nice 1,425 pip profit. If it drops further, you're looking at a nice 1,789 pips, and hope to God it doesn't drop here for you, because you'll be looking at a nice 2,602 profit opportunity. You want to buy in this area, and you want to sell in this area. This is the historical price for pound NCD. Let's get some more price data here. Look at that. Look at that. Look what this market has done. It's been so bearish down here. Everything down here, you should be doing what? And everything up here, you should be doing what? If you say buy, you are correct. If you say sell, you are correct. This is historical price way up here. We haven't seen prices this high since 92, since 2000. Are we going to see that? Yeah. Oh, we will. We will. I guarantee you. Sometime in the future, we're bottomed out now. We bottom out. We've been in this range since 2011. But this is a 2,600 pip range. Okay. Scroll down. Let's get down into the weeds. Okay. Again, in fact, I would move this up and make that my high probability. So 1.87, let me correct that. 1.87, I would put a buy limit there. I'll put another buy limit here at 1.82, and then another buy limit, low probability, 1.74. Okay. All right, so that is it for the high probability setup. I'm not even going to look at pound chef, cat chef. You guys have enough trading pairs as it is with these. Knowing what the outlook of the market, we've been on this for 2 hours now, and I am going to conclude this call. And I want to thank you all, and let's have a great trading week. Tuesday, Wednesday, Thursday, live trading room. We're going to look for some good short-term scalp opportunity. Wednesday, everyone's invited. All coaching students, all Easy Triple trading customers are invited once a week. VIP coaching student Tuesday, Wednesday, and Thursday, 7 to 10 o'clock. We will look for trading opportunities. I'll make sure to post that later today, if not tomorrow for sure, so that you guys can get prepared for Tuesday, Wednesday, and Thursday. Other than that, enjoy the rest of your Sunday, guys. All right, bye-bye.